Hey traders! Today I will explain how to leverage trade crypto in Canada. In Canada, registered cryptocurrency trading platforms are prohibited from offering margin or leverage trading to any clients, including both retail and professional investors. This ban is enforced by the Canadian Securities Administrators, also known as the CSA, and it was implemented to enhance investor protection after major crypto market insolvencies. This means you cannot directly leverage trade crypto on any registered Canadian platform. Since direct leveraged crypto trading is prohibited on registered Canadian platforms, individuals have two main legal alternatives to gain leveraged exposure to crypto assets. The first option is crypto exchange-traded funds, also known as ETFs. Canadian regulators have approved certain ETFs that use leverage to track the price movements of major cryptocurrencies like Bitcoin and Ether. These products provide exposure to the daily price movements of the underlying asset with a predetermined leverage factor, such as 1.25x. You can access these ETFs the same way you buy stocks by using traditional registered Canadian investment brokerages. The second option is using offshore or unregulated platforms. Some non-Canadian and unregulated platforms may offer leveraged crypto trading. However, using these platforms comes with significant risks. There is no regulatory oversight, no investor protection, and you may face difficulty converting funds back to Canadian dollars. The CSA strongly warns against using unregistered platforms. If you choose the regulated route of using leveraged ETFs, the general steps are simple. First, open an account by signing up with a registered Canadian investment brokerage such as Wealthsimple Investments, CoinSquare, or Fidelity Clearing Canada. Then fund your account by depositing Canadian dollars. After that, search for leveraged crypto ETFs and look for symbols of leveraged Bitcoin or Ether ETFs. For example, Evolve Funds offers LBIT for Bitcoin and Leth for Ether. When you find the ETF you want, place your order and buy the ETF units through your brokerage platform. After entering your position, monitor and manage risk because leveraged ETFs are designed for short-term trading and can show significant volatility. There are some important risks and considerations. The ban on direct margin trading on registered platforms is a strict regulatory measure. Platforms must follow strict rules for client asset segregation, and they are not allowed to pledge or rehypothecate client crypto assets. The Canada Revenue Agency considers cryptocurrency as a commodity, so profits are usually subject to capital gains tax. The tax treatment of leveraged products can be different, so it is recommended to consult a tax professional. Crypto assets are highly volatile, and leverage magnifies both potential gains and losses, including the risk of losing your entire investment. The platforms authorized to operate in Canada do not offer direct leverage or margin trading on crypto assets. These platforms include CoinSquare Capital Markets, including BitBuy, Coinbase Canada, CRYPTO.com, Kraken, Index, Netcoins, Newton Crypto, ShakePay, and Wealthsimple Investments. These platforms must follow investor protection rules that prohibit the use of client assets for leverage. That's it. Thanks for watching.